your general take on the quarter, as far as the profit is concerned, as far as your CET ratio, as far as what you think the most important numbers are for Deutsche Bank.
Well, look, I think continued balance sheet strength is certainly visible in our numbers. I think the 12.8% ratio remains very strong. Our liquidity remains strong. And so that's obviously a good foundational starting point. On the P&L, what I think you're seeing is the impact of the restructuring and the strategic decisions we made last year. So we were very gratified to see the business performance. I'd point to the core bank in particular, where with revenue growth of 7% and expense reductions of 4%, we created 11% operating leverage year over year. And that's demonstrating that both on the revenue side and on the expense side, the impact of the restructuring is making itself felt. So those would be the things that I'd focus on. The overall performance obviously is still weighed on by the CRU and the losses in the CRU. But even there, we're progressing, basically in line with our plans, both for deleveraging and cost reduction.
Are you seeing more clients, consumers to small and medium enterprises, ask for leniency in terms of repayment?
We have had a significant number of applications under the German law for moratoriums on interest and principal. That extends over 3 months, and we have obviously been engaging with clients and providing the support in terms of those interest and principal holidays.
Can you quantify those numbers, James?
In application terms, about 50,000 that have come in to date, and we expect more. And so we're obviously working throughout our network, call centers, and online to support clients in the way that the law proceeds. And again, the impacts of that we see as being very manageable, both within our risk constraints and our liquidity capacity.
What about the impact on targets? You were on track to post a pre-tax profit this year, but now you expect revenue to be slightly lower. Does that mean you're not going to make a profit?
So our official targets were expenses of $19.5 billion, and there we feel very comfortable that we're on track. Frankly, our expectation is that we will exceed, i.e. improve upon that target. The other principal targets that we had were capital targets, and hence the decision that we announced on Sunday to suspend those targets. I will say, it's got to be clear to people we're not, essentially abandoning the 12.5% level as a target. We're suspending that. We think we will restore our capital if we slip through the 12.5% level, which we may not. But we think we'll restore a glide path relatively quickly to 12.5, hence keeping that target for 22.